We're live.
Yay.
Let's go. So, continuing with our 10 for 10 segment, we have a special guest. We have Ezra Levine on today, CEO of Collectable. And continuing on with this theme of national, we're going to talk to Ezra. But funny thing is, Ezra just had a baby, little Theo Levine. So, congratulations, Ezra. But his team was there. And there was a lot of people representing Collectable, and they were throwing events. And it was an amazing, amazing time at National. So I'm curious, and we're going to talk to Ezra about his impression of National, his team's impression of National. And then, guys, stay tuned because at the end of this episode, we're going to have a special announcement, a really special partnership that I think a lot of people out there are going to benefit from in terms of education when it comes to fractional programs and fractional companies. And we're really, really excited to bring it to you guys because we've been working on it for a long time to get it just right. So it's really community focused. Before we get into that, guys, stay tuned. That's going to be at the end. First, we want to come on here and add value and share the 10 for 10 series. Welcome, Ezra. Welcome to the show, man. It's really good to have you on the 10 for 10 segment.
Thanks, guys. Always happy to be on with you guys.
So first things first. I mean, you guys asked this. Cage asked this. Are you getting any sleep? I know you just had a baby.
I'm definitely not getting any sleep. I probably slept a grand total about averaging 2 to 3 hours a night. I am getting used to this lack of sleep, and as people who've worked with me are getting used to it, I'm sending emails and making calls at the weirdest of times. You might hear from me at 2 o'clock in the morning. You might hear from me at 7 p.m. We are flexible, but look, we've got a great team at Collectable, and although I was not there at the Nationals directly, we definitely got a lot of feedback, and we know that the buzz at the show was incredible, and I think it really speaks to how early we are in this industry, how robust I think this industry is becoming, how much mainstream attention we're generating, and just real sort of excitement over the fact that Nationals was even able to occur, right? So I think it really speaks volumes to where the industry is today, how much progress has ensued, and in the prior 2 years since the last National, and I think just a tremendous amount of excitement about what the future of sports collectibles has in store for it.
What was some of the general feedback? Like if we just start really kind of open-ended and get into the details later on, what was kind of the general feedback from your team about National?
Great energy in the room, right? Really, just a tremendous amount of people there, just a tremendous amount of diversity in terms of the demographics, right? How young it was, right? How many new companies were there representing, how many new mainstream activations there were. I mean, I think there's definitely room for improvement across the board, obviously, in terms of kind of making the Nationals as progressive as this industry has become, right? Sort of a lot of innovation and change has happened in the prior 2 years since the last National. I give all of the organizers of the National, whether it's Mike or Dan or Cher or Kelsey. I mean, it's a ton of work to produce an event of that caliber, of that scale. I think it's the 41st year running of the National, of the Super Bowl of our industry. So just a tremendous hat tip and thank you to all the people who made that possible. But I definitely think that there's room for improvement in future years. Overall vibe, we got from my team was just a really incredibly exciting time for the industry, an incredible time for Collectible to be a part of it. And again, we're just really excited for what the future of the hobby has in store for it.
I love it. I mean, my take on it is, you hear about the hobby participants. We were going through a weird time there, before National. There were a couple months from I don't know, April on where, prices were falling a little bit. You had a lot of base cards kind of tanking. We were getting a lot of messages, from people saying, what's going on? Is this going to turn around? And then the National it builds up momentum. You know what I mean? It just changes the way people felt. And I know I spoke to some of your folks, but I like it because coming out of it now, people, it's almost like, all right, we got a refreshed sense of optimism now. And how could you not, right? I don't know if your folks told you this, right? But I mean, it's a lot of young kids, it's a lot of energy, it's a lot of youth movement, and I mean that to me that was like the big thing that came out of it. And I'll kind of pivot right to your world on this. I've been talking about this in a couple episodes, like the evolution of the hobby, the evolution of investing, right? And I think Collectable really has an opportunity to kind of capitalize on that, right? Because where we've gone over the last, let's call it 2 years, is people came in and it was all right, it's easy. we've heard a bunch of times people say we're going to replicate the stock market, right? We're going to be the stock market. But the way to do it was liquidity, right? Like we want to invest in Zion Williamson. So the liquid thing is that PSA 10. Or we want to invest in John Morant. The liquid thing is that PSA 10 base card, right? But what happens is then everybody's on that, and yeah, it creates a StockX type of everyone's the same. But we've kind of pivoted, right? We've pivoted in the last couple months to that base is no longer what people want. Now they want low numbered, low pop, and a 10 is not a 10. We've seen disruption in that whole world of Mike Baker with the stickers. We've seen PWCC, come up with a premium for their deal. And now it's no longer base. It's moved towards a more quality asset, a red or a blue, a numbered card. Is it fair for me to say, and then I'd love to hear what you were saying, that the next step in the evolution of that, the different way of this becoming a stock market is if you're evolving from base to numbered parallel, the next step would be the real top quality assets, those mantles instead of in a PSA 2 or 3 in an 8, those Zions or Lukas or Trays, but instead of a Prism base or a silver or a red in a national treasure. But because there are so few of those, the way that it's accessible for someone in the hobby, the same way they'd put $1,000 or $5,000 or a couple $100 into buying a base card, they can now instead buy a piece of the top asset that's out there. And the stock market, instead of buying one share of Zion as a base, you're buying one share of Zion, but the best Zion or the best Jow, the best Trey. Is that fair? Because that's kind of the way that I'm reading the tea leaves.
Yeah, I mean, look, I think if there's one clear trend that we saw, right, as the market was hiccuping over the last couple of months, is rarity will never go out of style, right? The iconic, rare low pop issues of iconic players really never went down, right? So I think, that's been Collectible's thesis all along, is that, as an investor or a collector, you want to own the best of the best, right? You want to own things where there's just a tremendous degree of cultural and historical relevance, right? And scarcity. That's been the mantra in collecting for as long as this market has existed, which is, decades, if not a century, right? So, what Collectible allows people to do is own the best of the best at affordable price points, right? Own the investment grade, the sort of the top assets that we're able to source and bring to the market, in a regulated fashion. In an easy consumer-friendly way that simply is, as efficient and as easy as buying, shares of Amazon, Facebook, or Google on the public markets, right? So yes, I think that thesis is a thesis that we certainly had when we launched Collectible, and I think we really saw that thesis play out over the last couple of months. When there's, when cards are up for auction every single day, or when, something's highly accessible, or there's just a ton of supply, it takes a lot of demand to soak up that supply for prices to remain stable, if not increasing, right? At the high end of the industry where there's high degree of scarcity and low population, it's just a much easier investment thesis. So I do think Collectible is uniquely able to provide iconic stuff that checks all the boxes at affordable price points, and hopefully, as liquidity continues to develop on our platform, make that stuff that was previously illiquid liquid, right? So I think that that 1-2 punch of investment grade blue chip stuff that historically has appreciated at far greater rates than less scarce stuff, while also overlaying a liquidity component to it. I mean, to us, that's a pretty unbeatable combination.
So I'm going to tell you something, right? And you tell me it's a story here, Ezra, right? And I've told the story once now, and I'm going to say it again. So why we have you on, I think this is the next chapter. And we've had on 10 for 10. We had on Ken Golden, who sells the top of the top in the market. We had on PWCC, who vaults and does private, they have private clients that they source the top of the market. Those guys are on. We had Lior on from Alt, and he talked about not buying the rookie cards, buy the rare. We had Carvin Chung on, who created exquisite cards. Not on purpose, but we've led up to you with the message that scarcity, that these low pop, these treasure cards, the cards that I can't afford individually, are the ones people should be seeking. even if they're not able to buy the whole thing, because most of the people listening to this can't buy the whole thing. But I would like to bring education, Andrew's always talking about this value-wise, to how they can buy a piece. And if you'll allow me, I'll do a story, right? And I told this once before. So it's not your platform, but maybe you'll have one soon. But on another platform, there is a full set of the Pokemon 1999 first edition PSA 10s, right? Currently valued about $600,000, let's say, on that platform in a secondary market, right? Now, I decided a couple of years ago I wanted that set. I thought it was a good investment. Let me say that, okay? It's not, I had no draw to Pokemon. I just thought it was underpriced and it was going to go up in value, right? My son likes the REITs and stuff. He likes the shiny stuff. He could have that. He doesn't care about the old stuff. It's not as shiny. It's not as pretty. But I said, you know what? I'm going to be able to buy this. And at the time, the whole set was about $100,000 with the Charizard about 50, 45, something like that. I said, I can't go in on the Charizard, but I got, $30,000, $40,000. Let me start buying some of the smaller items. Now, I did that. I kept doing it. It started to go up as I built it. And I'm very close to the whole set, but I'm missing the Charizard. Now, if I instead would have taken that initial 30 and put it into fractional of a set, all right, and then continued, instead of putting in my 100 or 200 or 300 or whatever it is, I did that over time. I would own about, I did the math on it, I would own about 82% of the set, including Charizard, which would put my value there at approximately $500,000 of that set. I'd be the huge owner, someone would buy out and be paying me, But the key is you'd be able to buy that out because I would own 82% of the Charizard too, right? Instead, I have now half the value of the set. My thing's probably worth about $225, and I don't have the Charizard. Nobody's buying my end, right? So think about that. That's like lesson learned, right? That's one of those things where I'd love for our audience to hear that, because that's my own mistake. Because at the time, I was one of these, and I know people listen to this audience, I want the card. Like, I want the card. But you know what happened? Over time, the card, the main card in that set, has now become something that I can't get. It's so expensive, right? Or maybe I can, but I have to sell my kids. But if I would have gotten in fractional with the same amount of money, my investment money would have been better off. And it's a hard lesson to learn. It cost me some money. But I want everyone to hear that lesson that's out there, because if we're doing this for an investment, if we're doing this to 1, 2, 3, 4x your money, right, and not take the card to your grave with you, which no one should do that. If your goal here is to make money, fractional is it's a clean way of doing it without returns and shipping and logistics and all that stuff. And for whatever reason, Ezra, I have to be honest, it's not something that my eyes were open to until very recently. With all of this talk about buying blue chips, all of this talk about buying the rare stuff, I was always let's buy the rookie. Let me buy this car. Let me buy the rookie. But that's not where the market is headed. And with scarcity being the king, the blue chips that you can offer are where people should be putting their money. There's my story. You can go. There's no question there. But you know me. I steal the microphone.
You're spot on. I mean, look, one real catalyst for fractionalization, I think, is sort of the overall maturation of the market, right? And so, when a market matures and big money comes in, and this institutional investor comes with deep pockets, and there's a little bit of this sort of interesting incentive where institutional capital likes to participate, but only when values get to a certain point, right? It's almost as if the higher prices go, the more capital comes in, since they're actually able to allocate and get sort of enough skin in the game where their research and their time and their human and intellectual capital sort of is rewarded, right? So we certainly saw this increasing barrier to entry, which we saw was a real risk for the collectibles category, in that rising prices were pricing out individual collectors. Rising prices were pricing out the bedrock of the industry, right? So what solutions could we roll out to continue the re-engagement for just regular collectors who, again, have been participating in this industry for decades? And I think fractional really solves that problem. I think it allows people to get exposure to blue chip investment supply, things that have long histories of appreciation at price points that are affordable to them, at exposure levels that are desirable for them, right? They can, and they can trade around it, right? You might want to be, overweight vintage today and overweight modern tomorrow. You can do that at Fractional with, very low transaction fees. You're able to move around the market, identify trends, and react to those trends in real time. Also, I think, obviously, all of us have seen this sort of this coming alive of NFTs and these coming alive, of digital representations of physical assets, right? People who have, 7-figure assets or 6-figure assets, or even high 5-figure assets, or even low 5-figure, are keeping them in vaults, right? So, you don't necessarily even have them in your physical possession. Sure, you can always get them if you want to. You can always take delivery on them if you wanted to. But you're generally speaking, if you're transacting, oftentimes you're transacting or appreciating your assets digitally, right? So, when you own something fractionally, it's that same concept, right? You're an owner, true and true. You can appreciate the assets, and you own blue chip stuff at affordable price points, and you have that sort of movability, that flexibility to diversify and to sort of rearrange how you want to collect. I think it's a really powerful thing. And again, I think it's a really natural evolution of the maturation of this market, a maturation that I think we're still so early, guys. In my humble opinion, I think we're still so early in this market. I mean, you guys have had amazing guests on, right, or over the series you guys are doing. I think that the general consensus is that we're still incredibly early on. There's sort of a lot of companies and mainstream media outlets who are giving attention to this industry for the first time. So I think in a supply constrained environment, this dramatic infusion of capital, I think it's I always say that I think right now, right, you want to own the best real estate in the meatpacking as the meatpacking is being developed. Right, I think we're in the process of developing meatpacking district here, right? Like I think we're in the process of building this, and I think owning the prime real estate in a neighborhood, in an industry that is just developing, is really a pretty attractive place to be right now.
I'm curious. So one of the kind of the general themes of everyone we interviewed was the average age there is 15 years younger than it's ever been, 20 years younger.
Yep.
You guys do a good job, and honestly, I mean, you guys listen to your customers. You listen to the community. That's a testament to what you guys do and what I've noticed. And I'm curious, what's the 1, 2, 3 things that holds people back from really understanding fractional, specifically that younger group?
Yeah, I think I mean, look, the main thing for us really is trust. Honestly, it's confidence, both in terms of our product and confidence in the market. Right? I think what fractionalization really can do is it can open up and knock down barriers to entry for hopefully millions of people to participate. Right? The industry, while amazing in a lot of ways, is really sort of a niche industry in many ways, right? So we're attracting people perhaps for the first time who are just sports fans, or who participate in fantasy sports and sports gambling, or hearing about this third-headed monster developing and they want exposure to it, but really don't know how to participate. They don't understand what makes assets move. They don't understand what the catalyst for the market is, right? So it's a continued evolution and education of investors and collectors in terms of just the overall marketplace. Right. And then, again, we're still a brand new company. I mean, we launched, we launched September 10th of 2020. So we're not even, sort of at our first birthday here. And, I think we require a lot of sensitive information, right? I mean, if you're going through our KYC AML checks, we ask, the same checks and balances and questions of you as if you're opening up a Fidelity account or a Schwab account. Not everyone is comfortable, giving sensitive personal information to a new company. Now, obviously, we built in all the protections and all sort of the transparency there known to possible. But I think people, when they first come to Collectable, they're saying, "I'm just buying a baseball card." Well, no, you're actually opening a brokerage account to make an investment in a security, which happens to be a baseball card, right? So I think it's that sort of continued education and trust that we continue to try to build. I still think, personally, as a company, we're still very early stages there.
Do you think, and this is a question for you too, Cage, do you think there's a level of trust in the curation process from your team as well? Because as you were talking, Cage, to me, there's such a distinct difference between investing in stock and cards, and it's really one specific thing. And, you pick when to invest, right? What's the right timing? Who to invest in, which company, which stock. But I also think with cards, which doesn't apply to stocks, is what card to invest in, right? And what's the right way to do it? Like you mentioned, Pokemon versus Fractional, buying the actual card versus, do I buy the Prism versus the National Treasures? When you have a team like the team behind Fractional, it's kind of their responsibility of the market to trust that you guys are going to curate the right thing to invest, the right version of the Zion card to invest.
Yes. Look, I think we are certainly we've thrown together a really amazing team of curators, right? Of appraisers, of people who know sort of all the dealings both publicly and privately. We've got our finger on the pulse of trends. We talk to a gazillion people every single day. We do the very best to to kind of curate things that we think have long-term potential. That's not to say that we're going to bat 100. I think even really sophisticated stock analysts, right? If you listen to Stevie Cohen from SEC Capital, he'll tell you his stock analysts are usually 55-45 correct, right? So the interesting thing about our platform is even if you don't necessarily love the IPO price, on the secondary market, you will get daily opportunities, right? So if you don't love the price on day one, you may love the price on day 7 or day 10, right? There's always opportunities, but we certainly are curating assets that we think check all of the boxes. We're looking for things that are historically and culturally relevant, things that are scarce and rare, things that we think are iconic underlying athletes, things that we think have growth potential. But we're not looking at this with a with a day trader's mentality. We're definitely taking a long-term investing thesis. However, there are short-term opportunities every single day on our platform. We've shown that over the last 2 weeks. We've gotten 2 buyout offers that are dramatic premiums to last trades in the secondary market. So we're trying to draw attention to that. We're trying to draw education to that. That the IPO really is sort of step one, right? It's the first move on the chessboard, but it's a long chessboard with a collectible, and there's always opportunities. You just have to kind of know where to look, and we'll be doing a lot of things over the next coming weeks and months to really sort of draw attention and raise awareness and education around those opportunities for our community.
So Andrew, you know what I would say to it, and I mean Ezra did a great job answering it. I saw a post yesterday. It was in somebody's story. And I was like, I'm buying these. And it was Zion-based Prism. I'm beating the hell out of Zion-based Prism, right? And, it was like, I'm buying these. I'm buying them now. And the comments in response were like, I don't know, man. The pop on those really scares me. The pop on those really scares me. And the original poster who was buying them wrote back in a reply saying, I know, but I'm not looking to hold these longer than like the first month of the season when I think he's going to explode and then sell them, right? So if I'm that guy, right, if that's what I'm doing, and he's going to spend $5,000 on Zion base cards, what difference does it make if he has the tangible cards? He's not planning on keeping that. He already has an entry and an exit strategy, right? I don't know why it took me this long to get here, Ezra. I'm sorry, but it really is that. If you're buying, we talk about it all the time. If you want to buy a guy in the offseason to sell right before the season starts, right? Then it shouldn't make a difference to you whether it's a tangible, not tangible. If your goal is to put $10,000 into that guy because you think that $10,000 is going to be worth $12,000 2 months later, fractional.
Do you think it's caged because there's like a commonly held belief that isn't true, and that commonly held belief is that base and cheap cards are more volatile and they go up and down more, when the actual reality, and this is so counterintuitive, like it took me a year to hear it, understand it, to fully process that, like the Jordan card, which is like a blue chip bellwether card, has actually appreciated more than lower end Jordans.
Yes.
And that's crazy, right? That like it's super counterintuitive.
So I think yes, because people look at those the low end cards, the Zion base, as liquid. But with secondary market now and trading every day, there's liquidity coming into fractional now that was not there before, right? So that I think is going to change. I think that may have been the way that it was. I think that you could get in and out of that Zion base pretty simple. But I think with the secondary market now, the way that it is, you can get in and out of your investment, in that any day.
Let's talk about that because Ezra, can you, for people, listening that, they might have an account on Collectable or they don't have any account and they're just signing up. How does the secondary market work? How does the trading window work for that?
Yeah. So over the last 6 months, we've done what's called Power Hour, right? So from 3 o'clock to 4 o'clock on weekdays, you're able to, it's a liquid dynamic market. You're able to throw in bids and asks, and there's immediate execution, right? We've sort of concentrated that liquidity to ensure that there is as liquid of a marketplace for when you actually log at the collectible and you want to potentially transact. Over the last 6 months, we've definitely grown our user base, and we've grown the potential for more trading volume to occur. As a result, we're actually expanding our Power Hour, right? So for a little breaking news on this podcast, because I always love coming on here and breaking some news, we're going to be expanding as of September 1st. We're going to be expanding our Power Hour to power 4 hours a day, right? So from 12 o'clock to 4 o'clock, 5 days a week, we will have instantaneous live executions, right? So it'll be dynamic marketplace from, again, 12 o'clock to 4 o'clock, 5 days a week on weekdays. We will have a fully dynamic secondary market with instantaneous executions if there's obviously a counterparty. The hope and the expectation is that by the end of 2021, we'll move to full stock market hours. So 9:30 to 4 p.m., 5 days a week. You will have that capability. So again, I think it's exciting, right? The ability to to log on to Collectable and to buy and sell iconic shares of some of the most iconic stuff in this industry is exciting for all of us. And I think I think it really speaks to the evolution of the marketplace.
I'm going to turn this over to you, Cage, if you have anything, and we'll go into our partnership too. But if you guys are on the other end sitting there, why did you guys bring on Ezra and Collectable? Well, think about this, guys. We've won it with this 10 for 10 series. We've brought in dealers, Jade and Wolf. Brought in breakers, Polwex, Starstock. Architects, as they call him, Carvin. We have Golden and PWCC. They're the heavy hitters. We have ambassadors like Yam and Drake. There was one fractional company at the whole show, and it was them. So I think it's smart for you guys to learn about this niche in the market that's growing and growing and growing and adding a lot of value to customers.
Well, thanks. I mean, look, we have chosen as a matter of sort of strategy for us, right, to be singularly focused on our niche, right? Because again, I think that really shows how bullish we really are on this particular sector, right? I don't think we would sort of stake our company's reputation on this industry unless we really believe that there were material tailwinds to drive both shareholder value for the investors on the platform and for shareholder values in Collectable, our parent company, right? So we're presented every single day, believe me, with opportunities to expand outside of sports. But we in our opinion, we have so much runway within sports and sports alone. And it's not just sports cards. I mean, you're going to see some of the most iconic pieces of memorabilia on our platform, in the next couple of weeks, in the next couple of months, in the next year. Our view is, there's so many little sectors within our sector, whether it's tickets, whether it's photography, whether it's memorabilia and game worn. I think there's so many different unique aspects of this marketplace, and the tailwinds here. I've studied a lot of companies, a lot of industries, in my time, in the public and private markets. I'll be honest, I don't think I've seen an industry that has as many bullish tailwinds for it in a supply constrained market as I've seen in the sports collectible category today. That's not a guarantee. That's not a projection. From our vantage point and from everything we know, there is just a tremendous amount of tailwinds coming to the space. And again, our view is we want to own and offer the premier real estate in a neighborhood that is rapidly growing and expanding and reaching mainstream prominence. And we think that we sort of identify the right niche here in sports collectibles
with a cap supply, right? That's the key kicker there. You're not making any more autographed jerseys of Kobe that he wore for his first game. The meatpacking district is the meatpacking district.
Yep.
Laguna Beach is Laguna Beach. You can't make more Laguna Beach.
Yep. No, 100%. Yeah. I mean, look, I think the supply stays fixed. Or in some cases with the cards, the pop count obviously could rise a little bit, but I think the demand, which is coming in and already has come in, but it's still, believe me, coming in fast and furiously, and really just scratching the surface of what the potential demand is in this category, will dramatically outweigh supply. And so I think it's a really simple formula. And then on top of that, it's sports. I mean, everyone loves sports, right? And it's players that have millions and millions and millions of eyeballs every single day. I mean, it's people who have brand recognitions and brand value, the likes of which presidents don't have, right? So it's a really incredibly exciting niche. And also I want to make this point. We're as bullish, if not more bullish, on memorabilia than we actually are on cards. I mean, if you look at some of the, I mean, it doesn't necessarily make a lot of intrinsic sense for RPAs of a questionable game-worn jersey for certain athletes to be trading, at material premiums to full game-worn uniforms, right? Yep. So everyone's looking for rarity and scarcity, and and game-worn. Well, you don't have to look that far into the game-worn category to see that there's some potential real mispricings in the memorabilia category. And I think we've identified some iconic items that, when you put it in the context of where card values are trading, they again, no projections, no guarantees of anything, of course, but within the framework of card prices, some of these memorabilia items we're going to be offering look stupidly cheap. I would say that. I think they look stupidly cheap. Our thesis really here has been that the reason why the discount for memorabilia has existed relative to cards is a function of a couple things, right? It's a function of the perceived illiquidity of these items compared to cards, the lack of a catalyst, which you typically get from memorabilia compared to cards. Right, with cards you might have something that's, even if it's numbered to 50 or 99, right? You generally get a catalyst for that, where a similar card trades at an auction. That's sort of looked at as a catalyst. You don't really get that with memorabilia, but I think Collectable can create those catalysts, right? So with Collectable, you're getting liquidity. We have the ability to sort of create catalysts, and you can own memorabilia as easy as owning cards, right? I think another knock against memorabilia as well, it's not that easy to store and insure. And if I screw it up, it diminishes that. Well, you don't have to worry about that either, right? Because we store everything, we vault everything for you, right? So literally, you could own a piece of iconic memorabilia in the same liquid manner as you can own a card. I think these things will really do a lot to kind of collapse that memorabilia discount people have seen. And, I think from Collectable over the next 6 months, you're going to see some truly breathtaking memorabilia offerings from us as well.
You know what I'm excited for? So people go to the Hall of Fame every year, right? And they look at the balls, they look at the memorabilia, and they do that for football, baseball, basketball. But picture this, you go to the Hall of Fame, but now you point to your son and you say, hey, son, I bought you shares in that ball. That we own that ball. We own a piece of that ball. And that, I think, is kind of cool. And correct me if I'm wrong, fractional companies allow for that. And I think the future of that museum-esque stuff, I think that's cool. I think you got a real connection to the memorabilia and to your kid and all that stuff. So that's interesting for me.
Yeah, for sure. Yeah, I think the next sort of evolution of Fractional also is, okay, we sort of established that there's a financial connection here, right? That you can invest in these items financially, but how can you sort of invest in these items emotionally? I think if we're being self-reflectively, the thing that we've not done a great job yet, but I think it's just a function of us being so early in our company's journey, is sort of creating that that emotional connection with items that you own digitally. Right. So, what ways are we able to kind of evoke that sort of emotional connection? I think doing, physical activations or partnerships where you can go and see and touch it, or just be able to tell your kid, hey, look, you're a shareholder, I'm a shareholder in this. I think that alone will do a lot. I think it's really interesting. So it's sort of bridging that physical and digital divide with Fractional, and I think we'll definitely do some really creative things around that.
That'll be helpful. I mean, we go to Disney World every year and we say, "Oh, you own part of this. You own this brick." You know what I mean? This piece of popcorn that just fell out of somebody's. That's the share of Disney you own. But still, it's it's pride and ownership. You know what I mean? That's the deal. So it'd be nice to see that, whether you're rolling off, keep it digital NFT versions of it, or whatever, a copy of it, whatever it may be, a certificate. Everybody likes to have some tangible thing to show what they have, but it's definitely cool, because I was going to ask you that. So I'm glad to see that you guys are focusing on that. I mean, it's how do you make it sexy? You know what I mean? How do you make it cool? People are always like, I got my Kareem, it's an 8. No, mine's an 8.5. Here's mine. It's a slab. Here it is. Show you mine.
That was half of our episode with Lefko. Just so you guys know, if you ever want to go back to that episode, it's just Cage and Lefko comparing whose Kareem is better, and you can sub out the word Kareem for anything.
Yeah,
Anything
pretty much
goes.
anything you like. But
And
I'll tell you, I was at Bleecker trading last night, and the guy came over. He's like, "Hey, you want to trade?" And I'm like, "Okay, what do you got with you?" And he goes, "I got my virtual portfolio. See if there's anything you like. You're in the vault, right? We could just move it over. I'll take some of your cards here, and you can." And I'm like, "Okay, I've never done that before. Let's just rock and roll." And he had all his vintage stuff, and I'm going through T206s. I'm going through caramels. I'm like, "All right, what do you want for this one? Do I have anything you like for that?" Even though I had physical cards and he had his phone. So it's a brave new world, folks.
Yeah. Well, look, I think while we're on the topic of sort of sex appeal of the industry, I think that's one thing which has really changed, since the last nationals, right? Is the cool factor and the sex appeal of this industry, right? I mean, you guys have had Zablo on, you guys have had Fleischman on, you guys have had people who are really looking at this and bringing a real cool factor.
Well, Ezra, before you go on, I just want to make it known. Ezra is saying that Zablo and Fleischman are sexy, and they have sex appeal. I did not say that. I just want to make sure this is Ezra saying it.
A little East Coast, West Coast action there.
Yeah, no, look, I think this industry has really become kind of cool, right? For the first time, it's become kind of cool. You have mainstream outlets talking about it. You have promoters and influencers and athletes talking about it. I think that's a very underrated part of this, right? Of just kind of bringing this more mainstream. It's no longer something your grandparents do or that's exclusive for men in sweatpants eating cheese fries, right? It's something that is mainstream and cool, and also has the characteristics of kind of fine art and investment criteria, but it's sports and everyone relates to sports, everyone gets sports, and there are lots of ways. I think you're going to see it from Collectable, but you're going to see it from a lot of other amazing companies in this category too, of just sort of the general sort of connection to pop culture and then the connection to the art space and just sort of bringing additional awareness and cool factor to the hobby. I think will really do a lot to continue the sort of mainstream adoption of this. And as it continues to go mainstream, it's that brings in additional demand, right? As people perceive it to be cool, it brings in additional people who otherwise wouldn't have thought twice about it. Now, I think you're just going to get a tremendous amount of eyeballs, influencers, media outlets continuing to talk about it. We've seen that already, but I think that's really just scratching the surface here.
So, you guys out there, to give it like the scientific definition of cool. So this is like a marketing 201. There's this adoption curve, and essentially along that adoption curve, there's innovators, early adopters, early majority, late majority, and laggards. Early and late majority make up 68%. That's the cool factor. It's when that general public, the 68% comes in and there's significant demand, and it's people like Dan Fleischman, who was an influencer in a whole bunch of different places, and now he's coming into the hobby. And guys, we'll get into our partnership right after this, but honestly, this is kind of what the episodes are going to be like, with a bit more data that Collectable provides for us. And what we wanted to do when we started the show, where we say, feed a man a fish, feed him for a day, teach a man to fish, feed him for a lifetime. And we've always been that way. And you guys out there, we want to share our strategies. We want to share what we're seeing. So our partnership was along those same lines. Like, we want to learn fractional. We want to understand it better. We want to see the data, analyze it, and provide you some of those summaries for you. So that's really what the partnership's going to be like. We're going to get the data on Sunday morning. Cage and I will do a weekly episode. Sunday night it will be released, and it will set you up for the week ahead when it comes to trading and power hour and all the things that Ezra mentioned. And also we'll sprinkle in, kind of CNBC Fast Money. We'll have some guests, some people, 5, 10, 15-minute segments that could come on and share different perspectives. So I think you guys are going to really, really enjoy the partnership with Collectable, because it's going to be structured way different. It's not going to be like Collectable's number one, buy Collectable, sign up. It's going to be like, this is what's going on in the fractional world, and maybe it could benefit you.
Right. So my take, guys, we are just a 10 for 10 little announcement exclusive, I guess, here is we're going to be doing a weekly episode about fractional, right? With data from Collectable. It's going to be only the fractional sports cards and memorabilia. That's what Collectable, that's what their markets are. We are not going to be shilling for Collectable. What we are planning on doing is, you're going to get this Sunday night. It's going to be there Monday morning for you to consume, Sunday night for you to consume. This way, when power hour is going from 12 to 4, it opens up on Monday. That secondary market opens up. We will have identified for you, hopefully, if there are, areas that we think are plays in that market. We also, just so that it's clear, right, We got lawnmowers and stuff going on in the background. I'm sorry, I don't know.
Have you guys ever seen the movie Savages?
No.
Oh man,
Are they behind
Artist-
you? Are they
No.
behind you? No. So, but what I wanted to say is important is we're going to identify areas where there are probably arbitrage opportunities where the secondary market has not caught up to what the card real value is. But we're going to point out ones where that's not the case. You know, we're going to let you know this one here, it's got room to maybe fall. This one here has run up a little bit too much. This one here, based on the most recent auctions that happened the week before, you know, it's not where I'd look at. Right? You know, the fractional market may have to catch up to what, you know, recent sales have done. So this is one of those things where, you know, just like when someone on Coffee with Cage asked, what do I think of Top Shot? I don't like not knowing. And once my eyes have been open to fractional over the last couple of months, about how this is something that I think makes total sense for you to have a portion of your portfolio in, right? Collectable is willing to give us this data, you know, and allow us to go out there and really give you what I think is educating on the fractional and the secondary market without saying buy collectible, buy collectible, buy collectible. Because, guys, you know us better than that. We're not going to do that, right? But we'd also be remiss. We're supposed to be providing you value. I think I can tell you guys right now, and I'll save it for our Monday episode. I know two things out there right now that I saw on Collectible's platform that I think are going to double in the next 2 months. Now, that I'm not forward thinking, forward statements. This is not advice. It's not. I mean, I'll give you my whole disclaimer, the whole deal. But in reality, you saw there are buyouts almost every week. Buyout opportunities. That's because, and we can say this right now, the market has started to go back up. There was a dip. And you see the auctions, and these auction prices are going back up. You see Jordan going back up. You saw Mantle at $800,000 go back up to $2 million, right? The fractional was behind that. It was lagging. So if you got into the secondary market on that Mantle after the Mantle PSA 8 sold at auction for over $2 million, you would have basically doubled your money in that Mantle investment if you got in on that secondary market the day that the trading opened up and started buying and your money. There's no reason not to do that. Now, I'm not going to own a PSA 8, but owning that PSA 8 in fractional and then doubling your money, you're investing in Mickey Mantle. You're investing in this, and you're finding an area where there is an arbitrage, there is an inefficiency in the market, and we want to be able to bring you those opportunities and help educate on fractional overall. And that's kind of what we're partnering with Collectable to do now.
Yeah. I mean, look, the catalyst for us here, right? Why we want to do this partnership is, I'll be candid, right? There's a lot of money to be made on the marketplace. A lot of money has been made on the secondary marketplace. When we looked at the demographics of the people who are really making a lot of money in the marketplace, it was people who knew what they were doing, right? It was people who had a lot of experience in this category who could identify mispricings and capitalize on them. Right. Our hope is that, and the whole reason why we go through all these painstaking processes to allow these things to be fractionalized is because we want everybody to have the same opportunities as the people who are in the know. So we've identified that, one of the reasons why, the bulk of the returns early on have been going to people who are capitalizing on mispricing the secondary market is because there's a lack of education for everyone else. Right. And, I think with Cage and Goldberg, you both are, what we love about you is you're wholly impartial, right? You really are wholly, and that was in, for little, action, right? For our conversation, one of the things that we both, completely agreed on was this has to be impartial, right? Because there are good opportunities on collectible in the secondary market, and there's some ones that probably are not great short-term opportunities either, right? So we want them to be fair, impartial, and honest with their assessments. There's going to be opportunities like there is in the stock market every single day. There will be different opportunities every week, right? And so having two people who understand the industry, who see it, from a macro perspective and from micro viewpoint also, right, who are looking at this fully impartially, who are market-oriented people and have a high degree of integrity. That's exactly what we wanted in this sort of analysis-related partnership. And we're excited to just provide continued education and awareness of the opportunity so everyone can capitalize in the ways that, really knowledgeable people have already been capitalized. Two prime examples. Over the last 2 weeks, right, we had, Rafael Devers 1-of-1 superfractor, right? It was trading, it was meandering, it was stalling, I should say, on our secondary market at like 30 grand, right down from the IPO. For a little bit of other breaking news, which we're going to break shortly, we got a buyout offer on this for $45,000 on Monday. And after we made the buyout offer announcement, there was a competitive bid, right? Someone else came over the top and said, hey, look, I think 45 is cheap. We went 3 or 4 rounds with 2 different bidders, and the high bid on the board right now, $78,000, right? That opportunity was just staring at people for months, right? There are sophisticated people who are looking at this and identifying opportunities on our marketplace day in, day out. Another prime example, we had a Brady flawless basket, meandering, stalling on the secondary market, I think around 30 also. We got a buyout offer, which was accepted by shareholders for $48,000, right? There's real money to be made if you know where to look. Right? If you know where to look. And our job right now is, because we're bringing so many people to this category who may not know where to look, intrinsically, how can we provide them the education and the knowledge in sort of a fair and impartial way so that they can potentially capitalize on these opportunities as well.
And guys, listen, so if you listen to that for a second, about a month ago, I told you Rafael Devers was a play.
Yes,
right?
you did.
And I said Rafael Devers is great. He hit his 28th home run last night. He's young. He's not going to get the headlines that Ohtani's getting. But guys, remember, I also told you Ohtani wasn't going to hit a lot of home runs the second half, and I'm right on that too. But I did you a disservice, and that's why we want to do this partnership, right? Because if you had $500 to put in Rafael Devers cards, right, and you bought 3 of his base cards, they've gone up, but that $500 is worth $600 now. But if you put that $500 in the Devers Superfractor on Collectable at a $28,000 valuation, your buyout now that's going to come with a high bidder would take that $500 to approximately $1,600.
Yep.
You would have gone more than 3x on your money. And that's my fault, because I told you the player, but I didn't take advantage of all of the opportunities that are now out there in the market for you. There's more than just go online, get on eBay, and buy yourself a couple of base chrome PSA 10s. Right? And obviously the rarity, the scarcity, the blue chip that is the Superfractor is why you get that competing bids, why you get those buyouts, and why you have the opportunity to really 3x your money over a short period of time.
And that's why we work so hard to bring you guys the guests like we do. Like, think about that. Let's connect the dots real quick. Lior, we just had him on Friday. He was just talking about the concept of buying Superfractors, not rookies. Well, you're sitting there saying, I can't buy a Devers Superfractor, but you can go on Fractional and own a piece of it so you use information that someone who's really intelligent, who's built up an amazing collection, and then you go use that information with the technology platform that's available. That's what we want you to do. So, to be fair, this is 45 minutes. Ezra's got to go take care of some kids. Leo's up. He's got to go get things. Real quick, last question. Ton of content creators. Did you get to watch any content from the show?
A lot. I mean, I wasn't there physically. I was certainly there digitally. I was checking in with our team over Slack. I watched a lot of content. I had just a tremendous amount of FOMO throughout the entire experience. I mean, I was watching enough where I felt like I was there, but not so much where I really had a lot of FOMO. I mean, that's clearly another huge area that we've seen a lot, right? Just the amount of content creation and quality content creation, whether it's documentaries, whether it's shows that we rolled out over the last couple of weeks with the panel, right? I mean, where we're literally sourcing expert opinions from Jesse Craig and Nick Saparo and David Kohler and Mike Hefner, and hosted by Bram Weinstein,
he does a great job.
He's incredible. He's a former SportsCenter anchor who's the voice of the Washington football team, produced by Chris Corbellini, a 4-time Emmy-winning producer. I mean, the type of quality content that is coming into this category for the first time. I mean, again, it's things like that just show continued evolution in the marketplace. We've all seen how much content creation can do for awareness and education around something. Whether it's this show right here, right, with you guys. I mean, there's just a tremendous amount of tailwinds. We've staked our company's reputation on this category. We could not be more bullish on it. Whether it's cards or memorabilia, tickets, photos, you name it, we'll have it. Shoes, we name it, we'll have it. But again, for us right now, it's education. It's the continued education as thousands and hundreds of, and hopefully millions of people come to the category. How can we provide them the knowledge base and the tools and the analytics so that they can be as informed as sharks who've been doing this for decades, right? And so that's really what we're most excited about. And I think once we get to that point where people are, I don't think you'll ever be on an equal playing field with experts who've been doing this for a while, but so you can at least be informed enough to capitalize, right? That's really what we're hoping to do. But again, informed in a fair and impartial way, not informed because we're trying to sell you something. Informed in a fair and impartial way so that you can do whatever you feel is in your best interest.
Couldn't say it better, other than say I don't care about 4 Emmys. I got 5 Emmys in my brain.
There you go.
You know, I mean, none of those guys are Cage. I mean, I'm gonna throw that out there. There's only just one me.
That is true.
Listen, we appreciate having you on. I'm a 1-on-1. I'm a super fractor.
Yeah.
I'm a super fractor. Andrew's gold vinyl. But listen,
I think your Emmys are ahead of you, brother. I really do. I really fully believe that.
That's it. Listen, Ezra, thanks for coming on.
Thanks, guys.
We appreciate you taking
always a pleasure.
A quick second away from the baby duties. Oh my God, jeez. I'm so happy my kids are a little older. Woo! Get some sleep. We appreciate it.
Thanks, guys. Of course, always.
Thank you.
Thanks, guys. Take care.